Hello from Trend Signal for our review of the data and events the week beginning the 26th of June. The final week in June, the final month of Q2 or the second quarter, and the final month of the first half of the year. It starts the week with news that two Italian banks have been rescued at taxpayers' expense. Article in the lead of the Financial Times: Italy sets aside 17 billion to wind down failing lenders. Most indices are higher on the back of that, 0.5% or more on the main indices here in Europe, with the MIB leading the way, about 1.3% higher on the European Banking Index, up about 1%. So whilst it on the surface looks like bad news, I think it removes the uncertainty that's been clouding the banking sector, specifically the Italian banking sector. Markets last week really doing not a lot. Sterling markets were a little bit weaker. The FTSE down about 0.5%, but the Dow was unchanged, the DAX was unchanged, S&P marginally higher, the Nikkei maybe up about 1%. Currencies also particularly quiet. The euro unchanged throughout the whole week against the dollar. Sterling a little bit weaker, but it's recovered this morning. Dollar yen, the dollar a little bit stronger versus the yen there. Other markets, we've seen gold starting to turn back up again in the latter part of last week, Thursday, Friday, as indeed the oil markets did, although oil still off $1.60, $1.50 on the US and UK oil, WTI and Brent that is. So that's still a fall of 3.5%. So stuck in tight ranges, beset by, I suppose, what you call impulsive moves that seem to wither and retrace. That's equities really and currencies largely. The European equities that made record highs in early May since have sort of drifted, not by a lot, but they have drifted. The FTSE 100 and 250 had a slightly different trajectory as the UK election rather clouded the picture there, but the FTSE 100 has caught up with its European counterparts through May, but post-election have drifted along with those same bourses. All a bit summerish, really, bearing in mind it's still the 26th of June. It's summer started early. The summer doldrums started early, that's for sure. Let's have a look at the events happening this week. The calendar is particularly thin on the ground. A lot of the high-impact bits of data are down to the Central Banking Forum meeting in Portugal that is happening this week. In fact, Mario Draghi is talking on both Monday and Tuesday, and whilst it's not something that he will necessarily be discussing, we are perhaps hoping that we'll get further information or clarification on his announcement that the QE tapering in the Eurozone will have to wait for a long time, was basically what he said. We've also got the release of the Bank of England's Stability Pact on Tuesday, the report on the Stability Pact. Whilst Carney is unlikely to be talking about it specifically, any comments that he does let go, as it were, could affect the pound. As we saw, he ruled out a rate rise last week, which rather contradicted the MPC's 3-5 vote, or whilst they weren't voting for a rate rise just yet, he seemed to think it was inappropriate, where Mr. Andy Haldane, the Bank of England's chief economist, then contradicted that again. So interesting debate taking place within the Bank of England. Wednesday, we've got Janet Yellen speaking at 6 o'clock. She's actually attending a conference in London. And there again, with rates, a rate decision with an unusually hawkish Janet Yellen, who's normally more of the dovish variety, suggested that rate rises would remain on track this year. There were some doubts due to the fall in inflation, but she basically noted that, or the committee noted that inflation is expected to get back on trend and what was expected at the beginning of the year. So a lot of central bankers out there talking, and again, more on Wednesday. Draghi again speaking at the Central Banking Forum in Portugal, along with Carney and Kuroda. So it's all happening on the central bank front, well, we have to stand up and take notice, because they remain in charge for now, at least. Crude oil inventories will have the usual attraction. Last week we saw a slightly bigger drawdown in stocks than was expected. The market blipped up short term, but then just fell quite sharply. It seems that the hedge funds are very much on the sell on any rallies mode now, and have, I think OPEC no longer believes that, the hedge funds no longer believe that OPEC's got the clout to shore up prices, at least not with the sort of meager cuts that they've engaged with so far. Maybe that'll change, but certainly hedge funds, contrary to their position in the first 3 months of this year, are now on the short side. Other bits of data out this week. Well, really, we got it's not a particularly important reading, the final reading of Q1 GDP in the United States. That's not expected to have any change. They've got most of the data in by now, so 1.2% is the final reading for Q1 in the United States. Then we have the current account here in the UK on Friday morning, but that's it. A particularly light calendar this week, dominated by the central bank forum in Portugal. That's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.